was watching. There's this show on Netflix.
Oh,
It's like a Japanese type of show where they go live in Hokkaido, but they're like in this greenhouse all together. But they're
doing
like
what?
they are. They're like they're like. You know, I don't know. They're like just very like quirky and stuff. Anyways, they kind of go there. They are getting to know each other. They go on like dates and this and this and that.
Okay.
But like
It's a reality show?
It's a reality show.
Oh, okay.
But
This is my tea.
but when you compare it to like the way the Western world is, it's so different on like how they date versus like how we
Explain
date.
why.
Why
we know how we date, but like how do they date?
Like I think we're more just direct and transparent and stuff.
Like want to smash?
Yeah, I think with like but with here it's like more direct. Like get to it. There it's like more polite and more like this and that. Yeah. Anyways, watch it. Just try. You might find it cutesy. I found it cutesy.
I will.
But
boyfriends.
Yeah.
Okay.
I think it's called The Boyfriend and Boyfriend.
I'll find it.
Yeah. But I was also watching this other show called Glory. It's a Korean K-drama, but they translate into English and all that. I got David into it. He's been obsessed with it right now. I've watched it a couple times, but it's like a sad but like happy show.
Okay.
I think there's only like 2 seasons of it, but it's about a girl who like got bullied a lot when she was younger, this and that, and like not just bullied but like terrorized. Like they were burning her like with a curling iron and this and that, and like a clothing iron. So like as she gets older, she does like this whole plan to get back at all these bullies and strategically, and like she's like gets them to go against each other. Anyways, it's such a great show. If you haven't watched it, it's on Netflix, by the way. Both the shows that I'm talking about are Netflix.
Did you watch Boots on Netflix?
I did.
That was such a good show.
It was a good show.
Loved Boots.
Yeah, it was a good show.
I made Tony watch
it too. Or we can talk about Heat of Rivalry. No, joke.
I didn't watch that. What's that? Is that the cowboy show?
No, it's a hockey one.
The hockey one. Yeah, everyone's talking about. Okay. Yeah. It's on my list. I haven't watched it yet.
Yeah.
I'm watching Love is Blind right now. The new season just
Love is Blind? You're still watching that?
The new season?
Yeah, but you're still watching it.
Yes. Love is Blind is
over it. I'm over it. I watched like the first 4 or 5 seasons.
Yeah. Those are all shit, I will tell you.
Okay.
But like Sweden and Europe and like all of those ones.
Oh, so you're watching all of them.
I watch all of them. But you know the terrible one was the Dubai, the Habibi one? They don't even touch. They're just like, hello, my love.
That was a funny one though. That was a funny one though. I thought it was like pretty funny.
Yeah.
Hi everybody.
Hi. Welcome to
Dealings with Tea. We are on episode 3. Wow, look at that. We made it.
Look at us. 3rd time's the charm, you know?
Tell me about it. We had actually an amazing guest on our episode 2. So if you haven't watched it and you want to learn about reverse mortgage, definitely check out our links for episode 2.
Yeah.
What did we talk about today? Before we even talk about that, how are you?
Guys, I'm sweating in here. We've been filming for all of 5 minutes and I'm just like flustered, but I'm
That's
great.
Okay. I easily sweat as well. What do they call it? The hypo something?
I'm a hypo a lot of things, so I'm not sure.
That's okay. But how are you? What did you get to this weekend?
Me, this weekend, it was Valentine's weekend this weekend, so my lovely husband cooked all day.
Good.
All day. Got me some nice presents. We chilled out, went to church. We're actually dog sitting dogs. We had 2 in the house, so it's really nice and fun to have 2 little angel babies, you know?
That's cute.
And
well, you got 2 little responsibilities now.
Yeah.
In addition, sometimes you got to take care of your partner.
Yeah.
So that's like another baby.
It's like a 3rd.
But that's okay.
Yeah. Apart from that, what else did I do? Well, I was following up with clients, so there's that, and having a few conversations about lending. So nothing too crazy. How about yourself?
I had quite a busy week, but also busy weekend. I think I had like dinner with a couple girlfriends on Thursday. Friday, I had a friend visiting in from Hong Kong. We went to, if you haven't tried out this amazing Mexican restaurant, it's called Playa Cabana. I go to the original one on DuPont Street. I know they've had other locations, but DuPont, hands down, like I think original locations are always best.
Yeah.
But their food was great. So me and my partner and my girlfriend, we all went there and then just took it easy. Went home, Netflix, chilled. And then Saturday, I went to the protest.
Yeah,
to support, free Iran. So that was a great experience. I got to go with a few friends that are from there, in addition with my partner, just to go support some friends and people that we call like family.
Yeah.
And then I had a friend's birthday. So I am quite exhausted. And then now here we are.
Thanks for making
it the podcast. Maybe a little bit burnt out.
Yeah, I'm feeling it. I'm feeling it a little, especially because it's winter too. Yeah. It's just gross outside.
Tell me about it.
It makes it worse. Like if it was, you know what, if it was 35 degrees and we're on the boat and we're just like chilling and like, you know, drinking and having a good time, and on top of all this work, I wouldn't be complaining.
But the heat can also burn you out as well.
Yeah, but like a nice golden tan and complaining is really not.
So the difference between myself and Amanda, and correct me if I'm wrong, is I'm the type of guy that likes to hide when the sun comes out, when it's too hot. Like, so I'm from Calgary, Alberta, but like, you know, we get the dry hot there. Here it's like humid hot and it's so sweaty. Yeah. And I remember working like when I was going to the office back in the day when I was wearing like suits and all the time in the corporate world. Yeah. I would continuously sweat so much that you could sometimes see the sweat coming out. And I was like, people are still like, why am I doing this?
Why?
You know, the workplaces should have a different policy in place that you should be able to dress more casual. Yeah. If you're not, you know, front facing with clients. Yeah. But let's talk about burnout and how we deal with it as leaders and entrepreneurs and just in general as human beings. I'm sure many of you guys can probably relate to what we kind of go through. So how do you deal with burnout, Amanda?
Honestly, I try to sleep. When I'm burnt out, I just get super tired and I try to just like prioritize rest. Yeah. But most importantly, I try to be active. I try to go to the gym. Well, I work out, but I try to work out more, especially when I'm in that headspace, just because it clears my mind a bit. Working more, honestly, kind of gets rid of it too, just because I like what I do. Do you know what I mean? But if I was in like the corporate world, for example, in my previous life, as I was burnt out constantly, I would just like I wouldn't even want to look at my computer. Do you know what I mean? So I guess it's a kind of different type of
burnout.
Yeah. Yeah.
I agree. I think there are completely different types of burnouts, right? Obviously, there is the work burnout and then the personal life burnout because. Look, we're human beings. We get emotionally burnt out, mentally burnt out, physically burnt out, right? I think the biggest thing for me is like my brain is always constantly going, but my body is so tired most of the time.
Man, just let me know. But my body.
So like this I think is also a realization is like as you're getting older. Like I think when I was in my 20s, I used to be like, yeah, don't worry, I'll be fine, not a big deal. And then now I am somebody who will keep on going and working my ass off until I get sick. So I usually either just end up with like a fever of some sort, and then that's kind of where, you know,
you're forced.
You're kind of forced to, right? But mostly with like Pat, you need to slow the F down. Yeah. And I don't know. It's just like I'm always like. I'm like an Energizer bunny rabbit that keeps going and going and going.
I believe you.
Yeah. So it's a little bit crazy, but look, at least I think when you can recognize that and you can reflect on it and you can say, hey, and it comes down to priorities. Like, what do you have going on in your life? And there are sacrifices that we do make.
Yeah. When was the last time you went on vacation?
Last time I went on vacation, are we talking about like outside the country?
Oh, yeah, like
I haven't really been out since COVID. I know it's crazy. A lot has happened in my life, and I'll tell you what's going to happen. I left my corporate job almost 4 or 5 years ago. I then was a one-man show doing my own thing. I left the corporate side during a downturn market. So like, you know, you're trying to build your business as a one-person show initially, and that's usually how most mortgage brokers, if you're ever interested in getting into the industry, you kind of end up kind of feeling you're a one-person show, right? Because you are entrepreneurs, you're contractors, and then things just happen. I end up start teaching at Remick, right? And then I went into a business partnership, so it was always like all these things were going on, but I am going on vacation soon. I'm going to Italy. That's where Amanda's family is from. Yeah. If you guys haven't known, if you watch our first episode, you would know that. So that's one great thing. But yeah, I'm going to Milan for a girlfriend's wedding. So me and a few friends are going along with my partner, and we're going there in June. But my 1 year anniversary is coming up too with my partner. So we are going to a cottage. I decided to surprise them with a cottage trip at the end of February.
Yeah. That's going to be so fun.
Yeah, so it'll be good. It'll be a nice, relaxing kind of getaway because like he works very hard too. You know, he's working a lot of shift works as a nurse, and then I'm always on the go working as well. So, you know, you try to find that balance, and when you can, it's great. But yeah.
Are you taking Kobe with you?
We are taking Kobe with us.
Oh, that's going to be good. Kobe's his
dog. Kobe is my dog. And for anybody who has ever had the opportunity to meet him, he is a COVID dog. So he has a lot of anxiety. He just turned 6 years old on the 11th of February. So did I do anything for him? Well, he's a really picky eater. Let's just say that.
So is mine.
Yeah, he's a very, very picky eater. Like if he has never tried something before, he'll just smell it for about 5 minutes before he eats it. He's not like your average dog that eats all that shit on the floor and all that and starts sniffing everywhere.
That's actually so good.
Yeah, which is a great thing, right? But like, he would rather, he hates bananas, which is weird, but he would rather eat like carrots or like lettuce or I don't know, something like cucumbers. Like that's his thing. Or watermelon. Watermelon is his most favorite thing. He loves it. Sometimes like peanut butter.
Peanut butter.
Yeah.
Oh yeah.
Yeah, but
you got a healthy doggy.
I know.
My dog wants like my steak. He doesn't give a shit about like my carrots or celery or lettuce.
My dog is more healthy than myself.
Same. Well, I guess I don't know.
And he gets a lot of self-care. Yeah. Because he's not doing anything, right? So like burnout for him is it's like, not a big thing.
I walked from the kitchen to the couch today and I was so tired.
Exactly. Exactly. Sweet. What about you?
What me? What about my dog?
No, where are you going on vacation?
Oh, me vacation. I just got back. I just went to Italy actually in August. A girlfriend of mine got married. We were in Calabria, and then my friends and I took a little detour. Went to Puglia.
Oh wow.
Drove around a bit there, so it was a really good trip. That was for like a couple weeks in August. That just about 6 months ago now. Geez. And then I don't think we're gonna go anywhere in the meantime, just because like I'm just trying to settle into my new entrepreneurial journey.
Awesome.
So yeah, no, not for a bit. Maybe just like a trip like Vegas or New York in the next like month or two.
But
apart from that, like I'm okay. We've done a lot of traveling.
Good.
My husband and I, like we've gone away once a quarter for the last 5 years, pretty much. So yeah.
I think a lot of people have, and you know what I came to actually like that's actually really funny, or not really funny, but I was so fascinated by this is when I moved to Toronto like 11, 12 years ago, I didn't realize that a lot of people don't leave the city.
Isn't that weird?
And some people have never been in the city. So there are people who live in the GTA, the Greater Toronto area, for those who may not be familiar, or even outside of it. I've spoken to so many people, and they're like, "Where do you live?" I'm like, "Toronto." Yeah. And they're like, "Oh, I've never been." I'm like, "What do you mean you've never been to Toronto?" Yeah. I'm like, I'm confused, right? Like, why haven't you been to Toronto? Like, oh, it's too much people, the population, it's too much traffic. Look, I am such a true city boy.
I'm a city girl, man. Right? You can't take it out of me.
I love, and it's so funny because I love like the reckless noise. I love people yelling at each other. Yes. I love the smell of the smokiness. Yeah. The garbage on the floor. It adds some authenticity to the city, right? Of course, people say like, oh, Toronto's like the small New York. Yeah, it kind of is. Yeah, and I don't know if you know, New York City is like hands down my favorite city.
Oh, me too.
Time. Yeah,
I used to live there.
Oh yeah. So, if I could live there, I would.
If I could afford to live there now, I would 100%.
Affordability, down payment. We need to talk about the rumors about
the scary parts.
The scary parts about I'm totally joking. Yeah. But when it comes to down payment in Canada, it is 5% on the first 500,000.
Yes.
Anything above the 500,000, you're paying 10% on that difference. Okay. Now, this is where we talk about insured mortgages. Some people may have heard about this, about mortgage default insurance. What does that mortgage default insurance do for borrowers? It really protects the lending institution, right? So like if you were to ever default on your mortgage, you're paying this insurance premium that gets tackled onto your mortgage amount. Yeah. If you default, the lender has every right to the insurance company is going to come after you
and to take your house,
to recoup everything that they possibly can, but they paid out the lending institution. Yeah. Now, this only happens when you are putting less than 20% down. In Canada, we had some new regulatory changes that happened not last year, the year before that, where clients can now purchase up to $1.5 million on the purchase price. It used to be $1 million, so it would be 500,000, 5%, and then everything else 10% on the excess amount. So that's actually a pretty cool thing. Now, I'm not sure how many people want to buy or can afford 1.5.
Yeah.
But you never know. Economy, At least this way allows you to work with less than 20% down if you can qualify, as opposed to having to put 20% down.
Yeah. Over 1.5 million, you do need the 20%.
Yeah.
So, and that's on your primary residence. If it's a rental, most lenders expect 35.
It can still be 20% depending on the rental, but the starting would be 20%. Sometimes they can push to 35% down.
Yeah.
And keep in mind, because there's so many different lending institutions, when we're dealing with your A lenders, your B lenders, or your private lenders, and when the market is taking a bit of a downturn, it's a little bit different because guess what? They're not willing to take the risk, right? So they might say, hey, in the condo space, which we know condos have been declining the last year, do expect that, if you're dealing with a B lender, or let's say you're dealing with a private lender, that could obviously increase your down payment. They might say, we want 30, 35% down to put us at a comfort level.
Yeah.
But you're dealing with your institution, big banks, you usually can start around 20%. Yeah. Now, 35% rule, that usually comes in with like more non-residents.
If multi-property.
Exactly. So it depends on comfort levels and types of property you're buying too. But down payment. Let's continue on about down payment. Yep. Now that you guys know what the rule is on percentage-wise, let's talk about sources of down payment.
Sources.
Who has money and where are you going to get the money, if you can, and what type of money you can use for down payment?
Yeah, most common is savings from employment income. So it's like your money, every paycheck you're putting X amount away, and that's going into your account, right? You can get a down payment in the form of a gift. That could be from a family member. And that means that this person's gifting you this money. So you're signing a letter saying that Patrick is gifting me $1 million.
Yeah.
And it's non-repayable in the eyes of the financial institution. So that's a gift.
Correct. Now, keeping in mind, when it comes to gifts, she was talking about family members. We're talking like immediate family members. Yeah. So we're talking sister, brother, mother, father, grandparents, uncles, and aunts don't really play in the part of immediate. Have there been exceptions that can be considered? Yes, some lenders will if the insurer's on board. Let's say like the uncle is the guardian now of that person or was because they were raised by that uncle and their parents weren't really there. It can be mitigated with a good explanation, right? What other type of sources of down payment?
You can have sale of the proceeds of a property, right? So let's say we're selling our home and that's the money we're going to use to buy the next place. That's a lot of what you typically see after you're a first-time home buyer, or not even just the sale, like equity from your home. So let's say we own a $5 million house. We're going to take out $1 million in a home equity or a second mortgage, and that could be the down payment for the next property, right?
Which is very common, yes. You could obviously use your savings, you can use your RSPs, your TFSAs, your FHSAs, you can use your stocks, your investments, your GICs, anything that is, let's say that you've saved up or invested into. The only time that you really have some challenges is when you start saying, I want to use credit cards or a personal line of credit.
Oh no.
There are programs for it, which is more related to the insurers, which is called like a flex, but not all lenders participate in the program, right?
Also, most lenders have, before we change subjects, have a percentage of down payment that can be borrowed.
Correct.
Non-housing, so like non-real estate borrowed.
Yeah, so that is the flex product, right? The insurers all participate in it, but even though the insurers participate, it does not necessarily mean that all the lenders do.
Correct.
So you've got to speak to a mortgage broker. If you watch our episode, on episode 2, if you have generational wealth, let's say grandparents or mom or whoever who has a lot of equity in the property, they can even get a reverse mortgage to lend you the money. And that would be gifted equity because mom and dad are saying, hey, here's the money. It's not repayable. It's a gift to you. And we get like wedding gifts and all that type of stuff too.
Yeah.
So there's so many forms of different types of down payment. And it all just makes sense, right? Because I think when we're talking down payment, like lenders also want to know where the source of the money came from, right?
Always,
so be prepared to have documentation to back things up because they are going to typically look at most situations 90-day history. If they see anything that's kind of like unexplained, if it's like you had, three $15,000 deposits going into the account, but you're much younger and say you're working an hourly rate job, they're going to say, where's this money coming from? You need to confirm the source of where that came from, right? And a lot of this people will say, but why? I saved all my, it doesn't matter. There's a thing in Canada called AML, anti-money laundering. And by law, as institutions, they have to verify the source of those funds. So if your mortgage broker is asking you, it's not their rule that they're making.
No, like...
we're just relaying.
We're the in between. Like,
exactly.
We have a fiduciary duty to like not, we have to know where money came from. It can't just be like, oh, I got this from, I found it outside. Like that's not the answer to that question.
Like mattress, and that's what we call it, is like when you have cash just sitting around. What lenders call that is mattress money.
You got it.
Right? And that's an absolute no that they will not accept.
Yeah.
Okay, so that there are things that you just gotta be prepared for. Look, speak to a mortgage broker, or obviously Amanda and myself. You can DM us, ask us more questions. We'd be more than happy to answer it because we specialize in that.
Sure.
But yeah, down payment is probably one of the main key things. There's two things that we look at: is down payment and income.
Yeah. And a lot of the times I see, like, we have someone who has like 200,000 in down payment, but then they only make like 30, 40 grand a year. Like, I don't know, that's not really going to help you if you want to buy a $500,000 house, right? No. So there's a fine balance between how much income you declare if you're self-employed, or you work, or you make cash, or whatever the case may be. Just prepare yourself in advance to know that, like, you have to have a minimum income as well to qualify for whatever you're going to buy, because there's no $100,000 condos in the city of Toronto. Maybe in like Alberta you can find something. That is true. Yeah. Depending on the price of the house.
My God, it was so funny. I was talking to somebody, one of my agents, the other day that's in Calgary. And they were saying to me, like, oh, you know, you can get like a 1,100 square foot condo for like 600,000, 500,000.
What?
And I was like, I miss those days.
Yeah.
Whatever happened here, you're getting a shoebox. For 500,000.
You're getting a junior 1-bedroom, maybe not even a, you know? No separated space.
Exactly. But I think the difference is, like, you know, we pay for convenience and the things that go on in the city. Doesn't make sense.
No, but
does anything make sense when it comes to real estate?
Never.
Half the time?
No. Like that shoebox will be worth $1 million one day. I don't know about that 1,100 square foot.
You never know.
You never know, but
I think a prime example would be New York.
Yeah. You know what that is? That shoebox is
New York.
Actually, that's a good segue. Let's talk about types of income.
Ooh, yeah, the next big thing, income, employment and income. There's being employed by somebody, an employer, you know, that are deducting the taxes off your checks and all that type of stuff, getting paid a salary or hourly. Now, if you're salaried, the lenders will allow you to use like the base salary that you're getting. Now, many people get bonuses as well. If you're getting bonuses with that employer, typically we need 2 years history of that bonus to be considered. Otherwise, you're just using your base. Okay. If you've been in, let's say, the same line of work potentially and same industry, and you're not on probation, you know, lenders will look at situations like that. I know when you talk to any institutions, they're always going to say they want to see like 3 years history of employment, of industry, or 2 minimum, depending whoever it is, right? But there are certain exceptions around the rules of that, right? Like if you're somebody who just switched jobs and you were working for a company before for like 5 years, and then you're starting this new job, but same industry or same line of work, but you're on probation, lenders will consider exceptions on that.
For sure.
Right? It's when you are stepping into a completely different line of work or different industry, then that's where they might say, no, you cannot close until your probation is actually over. Right.
So like we see that a lot, especially like with accountants, for example. Let's say they worked for, I don't know, Deloitte, and now they work for KPMG. That rule kind of doesn't apply. Like it's pretty straightforward. It's just a different company, same exact job, same business. But like let's say you were a banker and then you're going to construction and you're working hourly. That's a completely different story, right? So
exactly. You know, and then we have contract workers, right? If you're contracted with somebody, typically they want to see, you know, at least 2 years history in the same industry. But then with contract work, in addition, they want to make sure that contract is renewable. So like that employer typically needs to verify either verbally or on the letter saying, hey, the contract is renewable or extendable. It doesn't say guaranteed, but it's part of the conditions of that type of contract employment. Okay. And then the biggest one that we probably deal with, and the way, like, you know, look, we're living in such a different world today as compared to back then, because guess what? There's a lot more entrepreneurs.
100%.
Right?
And like not even just entrepreneurs, a lot of entrepreneurs with a job. So like multiple sources of income. So let's say like us. I like to say we're influencers and we get paid to be influencers.
I wish.
You know? But let's say we made money from social media, right? Plus we're mortgage agents, she's a broker. So like we make money from multiple sources, you're automatically now self-employed, right? So your income will fluctuate because of those things. And that's what I think I see most is BFS.
It is BFS. And I think sometimes the biggest challenge is that when you do step into the world of being self-employed, There are three things. It's going partnership to sole proprietor to also incorporated. Depending on how you structure that business, it's going to be dependent on like what your write-offs are going to be like, what tax bracket you're going to be in, and so forth, right? There's other types of incomes that can be considered. If you have kids under, let's say, the age of, I would say to be safe, 15 years or 12 years or younger, there's a thing called Canada Child Benefit that most parents can get for their children. That type of income can be used. If you are somebody who is divorced or separated, you're receiving alimony or child support, that income can also be used.
You got it.
If you are retired and you're receiving pension income, OAS. CPP, Canada Pension Plan, or Old Age Security, OAS, that also income can be considered. If you're somebody with a whole bunch of high net worth and you're a multi-millionaire of millions of dollars or a few $100,000 here and there, 6 figures or more, that is also can help you qualify for a mortgage.
Exactly.
So there are many forms of income that can be considered. It's just ask the questions. And really your mortgage broker, if you're working with, should be asking you that. Is there any other sources of income that you receive, right?
Giving us the most information is the best way to go. Like, try to tell us everything up front, because we're just thinking about how we can best help you. Like, let's just say, I tell you, we're short like 20,000. You're like, I make that in a month because I have a side business. Like, you got to tell us that, it's going to help, right?
100%. Go full disclosure to your mortgage broker. Will determine what income is going to be used or not. Obviously, if you make more than enough income, then we're not going to ask for everything, because we don't need that income to qualify, right? And there are so many different types of income depending on the lender you're using. There's contributory income. Let's say you're a mom and dad and you are buying a place, but then your son is living in the property with you, or your daughter's living in the property with you, but they we could use a portion of their income to help qualify.
You can use we use rents too if you have rental properties, right? So anything surplus, we could use that too. Also, we talked about equity lending, and that you don't even need to have income. Do you know what I mean? So
there is, yes.
You're just really rich.
There are some equity lending programs out there. Those ones are usually restricted that you've got to put at least 35% down for it. But it can help where almost like you don't really need income to qualify. Right? If your sister is going to come and help you purchase a property or to qualify for a mortgage, but they don't own a property currently today, they can actually go as a guarantor. We can use their income to qualify, but they're not required to be registered on title. And one of the benefits there is, guess what? They're not opting in for their first-time home buyers incentives and their benefits, right? So that the guarantor is guaranteeing that those mortgage payments are going to be made. You look back in the day, people used to, I don't know why, I remember when I got into the industry, people used to always think that a guarantor after 1 year would automatically be removed off the mortgage.
Oh, what?
And I was like, no, that's not the case. It doesn't happen like that. I'm like, you still have to requalify. Mortgage brokers, if they're a great mortgage broker and they have great relationships with a lawyer, they will refer you at least two to choose from.
Yes.
Okay, so that's something just to keep in mind. But also there's lender relationships, right?
And I think that's the most important part of dealing with the right mortgage broker.
Yes.
Like, that's, if not the biggest pro to dealing with a broker instead of a bank, in my opinion, because we have those relationships with a lot of lenders. Like, we work really closely with X bank or X lender, which makes our process probably a lot quicker than the average broker, just because we have 100%. That volume with them, that relationship, that back and forth, and that rapport. And it comes down to trust at the end of the day.
Exactly. And I think if anybody who has ever dealt with a bank directly and you walked into the branch, those approvals can take a long time. It can take weeks. It's not going to happen overnight. But when you are dealing with mortgage brokers, they do have access to lenders where you can get an approval within 24 hours or sometimes 48 hours. But there's
sometimes really even quicker.
Sometimes even quicker, depending, right? Some lenders out there pride themselves on service, but it also comes down to the broker that you're working with, right? Because brokers, if you're actively working in a residential space, you should be working with many different lending institutions on the A side. And look, there are over there's 1,000 different lending institutions out there. That's including A lenders, B lenders, private lenders, commercial lenders, and all that, right? I think in the A space, we're probably looking at, I would say, maybe about 30 A lenders that they can look at. Then you have your credit unions as well, right? So it's so important to know that you have options. And if let's say, for example, if your broker is just specifically just pushing one lending institution all the time, that's where you got to ask them, okay, what other options did you look at for me? Brokers are a representation of the lender. We have a fiduciary duty to the lender to represent them in the best, most ethical way, as opposed as we have a fiduciary duty to clients as well, to making sure that they are being treated fairly and being received the right products and services. Yeah.
We're not in the business of selling bad business,
Yeah, and I think 100%. And I think relationships are just so key, even with realtors.
Oh gosh,
Now, in most situations, it's usually the realtor that comes to the mortgage broker. But if you're a realtor and you're watching this, it is so important to making sure that you know what type of mortgage broker you're working with.
Yes.
Okay, and that they know their shit.
They know,
I'm sorry.
But no, for real. Don't be referring to some broker who never did anything or never had the experience or hasn't worked in the industry for a while, because I guess that takes a detriment. Not saying no one can learn, but that takes a detriment and that can take longer and cause delays for your client, right? And you don't necessarily want that. So you want to be good on both sides of the team, right? So realtors and us are we work together. So let's make sure that that is concrete and you're giving the right advice, not just deal with whoever and then figure it out later, right?
Look, I would rather deal with the less car salesy person and deal with a more knowledgeable, nerdy, or more not nerdy, but more the person that probably sounds more intellectual to have a conversation with, right? If I feel like somebody is too salesy for me, even when I get a phone call from a sales rep of some sort of any other industry, if it's too much fluff, I'm like, I just what exactly are you needing from me? What do you want from me, right? I don't need to hear the whole sales pitch.
Just give it to me straight.
I get it. I'm just more of a transparent person, and I expect that from my clients and my referral partners and partnerships that I deal with, because that is what's gonna build that foundation, that strong foundation. I think when people are too much about the fluff and all of this and the glitz and the glams and stuff, that's not going to take you far. That's eventually that mask is going to come off.
Yeah, it works the same way with the way we work with lenders too. So we want to make sure our people we deal with at those lenders are giving us the straight, the rate's 2.5, which is phenomenal, but then the mortgage, you can't break it. You're stuck here for 10 years. You know what I mean? All the things. So it works that way on both sides.
And we're going to talk about penalty structures in another segment, because that is so key on who you go to and how you can get screwed over. Sometimes. All the time. If you listen to your mortgage broker, a good mortgage broker
will tell you.
But if you go to the big banks, that's a risk you're taking on your own.
Exactly. And they're not going to tell you that. And not all banks have something called portability, which means moving a mortgage from one property to another, or blending the rate, or when's the best time to actually pay the penalty because the rate is, let's say, 2% better, right? So those things you're not going to get at the bank. 90% of the time you won't get them at the bank, but you definitely will get that with a broker, because that depends on how we would advise you as well too.
Cheers.
Watch the newest episode because I started from the top, but
Okay, so you started season 1? And what did you think?
So far, so good. I love the tea. I love the drama. I love the spiciness, if that makes sense.
So you're watching with Jen Shaw.
Yes.
She's no longer on the show.
Okay.
She went to jail. For committing elderly fraud. Yeah.
Like a grandparent scheme?
Yeah.
Oh fuck.
You'll see it. Yeah.
Okay.
Did you see Mary?
Yes.
This is her now.
I like Mary.
But she gets even better.
Even better?
Because she goes out of, remember how I told you she goes out of a couple seasons?
Correct. And she comes back.
Afterwards, she comes back
around season 4?
She comes back around when Jen Shaw goes to jail. Because she hates her.
Producers.
She's like, Jen, I really hope that you're guilty. Oh wait, I'm not guilty.